Okay. Good morning, everyone. And as you will be aware, due to the COVID restrictions, we will be meeting remotely this morning. And as the public can't be with us, we will be live streaming, just to let people aware. Saying that, we have a very short agenda as far as the public goes, and we'll be moving into a private session fairly shortly. I'd like to welcome everybody this morning, and I'd like to welcome David Morgan from SEPA this morning, who's taken up the post, given that Jennifer has now left us. Thanks and good morning, David. Antonio, you've got any apologies?
Yes, I have two apologies. Provost Buchanan and George Murphy from Stirling Council.
Okay, thank you. Any declarations of interest? Nope. Great. Thanks, folks. Moving on to agenda item 3, and that's the minutes A and B. Anyway, everybody agree with the minutes for minute A?
Agreed.
Agreed. Nothing arising?
Thank
Nope.
you.
Minute B?
Agreed.
Agreed. Anything arising? No.
No, thank you.
Swiftly moving on. Thanks, Neil. Swiftly moving on to agenda item 4, and that's general governance. I'm going to hand over to Brian. Thanks, Brian.
Thanks, convener, and good morning, everybody. This first paper on the agenda is the usual roundup of a variety of different elements just to bring to your attention. I think one could say, just looking at the content of the paper, that there's a strong people element reflected. And if I just focus on that and bring those strands together, which are peppered throughout the paper, the first thing to note is happily we have appointed a new manager, Catherine. In fact, I've got a meeting with her and Debbie tomorrow as part of a pre-arranged knowledge transfer at the new offices at the forum. Catherine's scheduled to start at the end of January, so not too far away. So that's a very positive development. Convener, you've already acknowledged and welcomed David from SEPA. And if I can add my own welcome to him, I know Alistair had arranged a induction session with David, which hopefully, David, you found helpful. I'd hoped to join that at least some point, but it coincided with the corporate management team, which, as it tends to do, went on a bit, so I wasn't able to join that call. But as I say, a warm welcome from myself. We pick up on a couple of retirements. I know at the previous meeting verbally that was said, but just for formality, the notification of my own demise from the end of the financial year, and that since that last meeting has been supplemented by Stuart Ritchie, who is my boss, also retiring at the same time. And perhaps there's a pertinent alignment with the report what we'll come on to shortly in terms of merger and the strong dimension to that, linking with resilience, and just to make that observation. And maybe the final point under that broad headline of people is just to note that from the start of this week, the pension section has relocated from the municipal buildings, which now effectively is closed in Falkirk, central Falkirk, to the new offices at the Foundry at Marber. So that's taken away this week. In terms of more operational areas, I won't go through everything, but maybe a couple to just touch on. The first one is the data quality scores in section 6, and you can see the positive trend there in the table at 6.3. In section 7, just to bring you up to speed with the position with the annual benefit statements and the particular problems that SEPA have had on the back of the cyber attack, and given appropriate protocols here, the regulator has been notified, and the respective data protection officers. So we've just played that by the book in terms of appropriate notifications. And I think, convener, I'll stop there. There are other sections, but they are the standard content, and I'll just draw a line there. Thank you, convener.
Thanks, Brian. It's good to know that our pension team have now settled down at the foundry, because I think there was quite a bit of shall we say concern, obviously, due to the shifting of staff, the leaving of staff, and obviously having to relocate all happening at the one time, given the fact that most of us are still working from home most of the time. So it's been a difficult time, and I appreciate, you know, the people that have hung on in there, and you know, they're more settled now. So I'm glad about that, and thanks for that. And as Brian says, himself and Stuart are leaving us, and that will be another upheaval, but we've obviously got plans in place going forward to strengthen our team, with a further report later on and on the agenda. Has anyone got any questions about the governance? No? Okay, folks, we'll move on then to agenda item 5, market review and fund management performance. I'm going to hand you over to, is it Bruce? Brilliant, Bruce.
Yes. Hello, good morning, everybody. Yes, review on the assets of the fund and the investments. So the fund has grown to £3.1 billion. And as we all know, goods and services inflation as measured by CPI and RPI have increased here and abroad. And inflation has also been seen in asset prices. Whether that's permanent or transitory does remain to be seen. As far as the report is concerned, I'll highlight section 4, table 3, where you see the look through current actual allocation and the strategy allocation. And by that, I mean that the table's adjusted for the other category, which is diversified assets. So you get a better picture of the actual allocations in table 2. You can see that there's an underweight in LDI, now that's gilts, so UK sovereign bonds, an overweight in cash, and those offset each other. So the reason for that is that with interest rates so low and inflation a little bit higher, advisors highlight that the risk of capital loss in gilts is judged to be higher than that for cash. So they recommend progress to the target is gradual. There has been some progress in terms of activity over the last quarter. The other thing restraining movement to the targets is the real assets allocation, which is underweight, and that's because of these are private market assets and therefore less liquid. So progress there will take time, as you know, quarters, not months. But we do go into the end of the year with quite an active pipeline of investment opportunities in that particular area. So the residual is an underweight in non-gilt debt and an overweight in equities. And the GISP advisors are certainly more enthusiastic about equities than debt, given the very easy monetary policy and an inflationary backdrop. So all in all, the fund's not too far away from its long-term strategy, and subject to no major market dislocations, you can expect to get closer gradually over the next few quarters. Section 5 refers to the table in Appendix 1, which shows the size of the fund and each mandate and their rates of return over various time periods. The fund is performing slightly below or slightly above benchmark depending on time period. Over the 3 and 5 year periods, you can see from the benchmark data that it's been good to be overweight equities and underweight bonds and other debt assets. But that's been more than offset by being overweight to UK assets relative to overseas assets, notably the US equity assets, where the benchmarks become increasingly concentrated in and expensive, I think, in what I'll call US tech stocks. One other thing just to point out is that when we look at interest rates and asset appreciation over the last year or so, we do estimate that the funding level has increased slightly since the actuarial valuation in 2020. I will discuss the managers later on in the agenda, but I would just highlight that the PICTE Global Environmental Opportunities Mandate, which is now 165 million in size, is off to a good start. So with that, I would refer you back to the recommendations in section 2.
Thanks, Bruce. Okay, everyone, has anyone got any questions? No, no questions at all? Happy to note the recommendations? Yep,
Agreed.
thank you. This is us now moving into a private, so we'll be excluding the public from this time. It'll take a wee minute for Brian to stop the live stream. Just give us a second. Okay, Brian?